guys, so video yang Anda akan nonton ini semua full bahasa Inggris tapi isinya penting sekali, ilmu daging semua. Karena tamu yang diinterview sama saya, ini seorang yang sangat spesial. Dia memang orang yang sudah kaya, so kekayaannya dia sudah ratusan miliar rupiah ke atas. Dia sudah masuk ke Bitcoin waktu Bitcoin masih $1,000, sekarang udah hampir $70,000. So dia udah masuk sejak lama banget. Dan oleh karena itu dia bisa hidup dengan gaya hidup yang sangat-sangat bebas. Dia satu-satunya orang yang sudah kaya, gak berubah, gak punya banyak supercar ataupun satupun supercar gak ada. Dia lebih pilih untuk tenang, hidup damai di tempat pertanian dia yang isinya cuma hewan, tanaman, dan hidup dengan sangat-sangat alami. Isi otak dia sangat-sangat khusus. Penuh dengan kebijakan, penuh dengan kesabaran dan kebaikan. Dan ini adalah Q&A call yang diadakan sama komunitas VIP kami. So, orang-orang yang sudah masuk VIP Telegram, kita undang mereka supaya bisa tanya jawab secara live. Dan isi komunitas kita juga orang-orang spesial-spesial semua ya, dari bervariasi background. Ada yang sudah sukses besar, ada yang lagi naik ombak mau jadi sukses, macam-macam backgroundnya. Tapi isinya sangat-sangat bagus dan aku sangat rekomen Anda nonton. Ini memang bahasa Inggris, namun editors kami sudah bantu kasih subtitle bahasa Indonesia sepanjang klip ini. So, enjoy dan semoga banyak belajar. So, now I'll switch to English full. So, let's give a quick introduction to who we have here today as our special guest on our Q&A call. His name is Paul Council. He is a verified multi-millionaire. He comes from Australia. I met him in Australia as well. And our history goes back, on and off, but goes back probably about 10 years or so, me having known him. And he's the author of 3 books, The Psychology of Wealth, The Essentials of Wealth, and The Mechanics of Wealth. You can look these books up on Amazon. He is rated as the top, if I'm not mistaken, top 2% business consultants in all of Australia on LinkedIn. And he has worked with some really, really big names in the past. We're talking the likes of Tony Robbins, Tung Desum Waringin in Indonesia. He's been on stage with him as well. And he's been in Bitcoin much longer than I have. I believe, if I'm not mistaken, around when Bitcoin was about $1,000 per Bitcoin, but Paul can correct me on that if I'm wrong. That being said, though, something that I find, so most people here can at least listen, and some can speak for both, okay? So that's great. The one thing that I find very interesting, having known Paul for that long, first of all, he's been a great influence, a very significant, important influence in my own personal life, in business and in personal life. But outside of that, I mean, during my 15 years of business and entrepreneurship, there have been many coaches, mentors, people that I have either paid for their courses, been coached by them, or sought for education that I've come across throughout my years. And many of them, after 10 years, so they were popular when I met them, they were big and they're living the high life. After 10 years, you look back at where these people are. A lot of these people that were once teaching courses on how to do this, how to do that, how to do real estate, how to do whatever it was that they were teaching, a lot of them many went, either disappeared and assumedly went broke. Some of them are actually broke. Some of them have, there's a saying that goes, money isn't, all money does is when you have more money, it reveals who you truly are, right? And all I'm saying is after 10, 15 years of having been in business and seeing what people are doing, right? Paul is one of the few examples where even though he's already achieved a significant level of success where money is concerned, it hasn't really shown I would say maybe a corrupt side or a side of him that goes the other way. In fact, he's one of the few examples that I know that truly live, in my definitions, a very free lifestyle, full of choices, full of, I would say, happy experiences, ultimate flexibility. He's not tied to shareholders, directors, bosses, anybody of that kind, and has everything that I think anybody could ever want. So without further ado, let me give the reins over to Paul. So Paul, if you want to take over. I will say before we also begin, a disclaimer in advance that Everything we talk about today, all the content, all the information we speak about is only for generic information purposes, for educational purposes, for entertainment purposes, and not to be considered financial or investment advice or legal advice of any kind. Seek advice from professional and licensed professionals before taking any further actions. Do your own research and just be a bit smart about it. Okay, so that being said, I'll hand things over to you, Paul, if you want to take it away. And we'll format this as an open-ended Q&A. Anybody can ask questions. I've also sent Paul the questions.
Good. Thanks very much. And thanks very much for that introduction, Brian. It's, for me, it's really somewhere between an honor and a privilege to, be invited to speak to a group of people such as yourselves, because, well, there's many reasons why it's a privilege and an honor. But it wasn't that many years ago where I was on a call, not a call like this, because the Zoom is too modern for me. I'm an old fella now. But there was a time in my life where I was desperate for questions, desperate for answers, because I didn't know anything about money either. And so to be able to now, come like a full circle and be able to offer some thoughts and some ideas and some of my experiences back into people who are just perhaps starting out on their journey. So thank you for taking or offering me the opportunity, and thank you for participating in the opportunity. So congratulations to everybody that's on the call.
Thank you, Paul. And by the way, friends, if you want,
where would you like?
So, Paul, I've sent over by email.
Thank you, Lydia. Yes.
I've sent over by email all the questions.
You just want me to you just want me to go down the list, or do you want to read them out?
So I'll preempt this by saying, friends that are joining in on this call, if you guys want to turn on your video, yeah, I think I am lagging. Turn on your video and or turn on your microphone. If you want to ask a question, you can do so basically at any time. I will repeat that there is no fixed agenda on this call. So there's no theme, like, if we talk about just an hour ago, we were doing live stream number 11. That had a theme. We were specifically talking about, how to secure your coins, use a crypto wallet, how to transfer specific types of coins, what to do in the compounding phase, which is the phase we're currently at in crypto, and that stuff. So we had a theme and we had an agenda. It was mostly me talking. This particular call, there is no theme. So if nobody has questions, we're going to finish this call very quickly. Okay. That being said, you can interrupt me anytime you like while I'm reading these questions, or Paul, and turn on your microphone, turn on your video, and just ask. In the meantime, I'm going to go down a list because we did get everybody to register online. And there's a list of questions that came up. Okay. So I'll read some of the ones that I believe are, if I go down the full list, there's actually a total of 28 questions. So, I'll start with, the deeper ones. And then, as we go along, we might get to other ones. And then, of course, just, feel free to expand on anything we talk about, because this is for you. We have nothing to sell you. There is nothing that, there is no agenda behind any of this. Okay. So it's only to help you guys be more successful. That being said, so how about I pick a few questions for you, Paul? Is that okay? And let's see how we go.
Yeah, sure. All
right. So there is a question from Amelia. So Amelia, if you're there, you can say hello. And her question is, what did you do with all the wealth you made from crypto? Did you go back to do business in real life? While investing in crypto may be simpler, or did you invest in other things like maybe the stock market? How do you maintain the wealth you made from crypto until you reach old age and die? Hope that comes later, but that was a question.
There's a couple of questions there. Just say them again, but stop at the end of the first question.
What did you do with all the wealth you made from crypto?
Okay, so I haven't done anything with all of the wealth that I've made from crypto. Okay, it's still in crypto format, and I will hold those things until there's something that I actually need them for, and I can't think of why I would actually, cash them in, because the cryptos that I'm holding are doing better in terms of growth than any other form of investment or, share market that I am also in, but I don't take the crypto out and go into the share market because the crypto is a more rewarding place than the share market is. So I've done nothing with it. It just continues to compound and compound and compound and compound and compound. So that's the first part of that question.
Okay.
I think there were several parts.
The second part says, did you go back to do business in real life?
I've always done business at the same time that I've done crypto. At the same time, I'm doing things in the share market and also, the real estate market. But primarily, in let's say the last 10 years, it's only been business and basically the crypto space. But underpinning that, always as an insurance policy, I have a firm belief in silver and gold as basically an underlying base foundation insurance policy.
Does anybody want to ask questions in relation to any of these questions, or would you like some of you why silver and gold? In the meantime, so the next part of the question goes, or did you invest in other things like maybe the stock market? But I think you just answered that.
Yes. No, the stock market is, for my way of thinking and for my needs, the stock market offers a very poor return.
Okay, so just checking, guys, is the internet connection okay on everybody's side? Video clear, audio clear? Please confirm. I think we've got a couple of people that seems okay. And the final part of her question, all good, yeah? Cool. The final part of Amelia's question is, how do you maintain the wealth you made from crypto until you reach old age and die? I might actually even add to that personally and just go extend that and go beyond that and go, well, in terms of, what do you call it, inheritance or things of that nature, how that would be approached in your perspective, Paul.
Yes. Like I said, I can't see a reason why I would ever sell the crypto. Because if you think about, if you just take Bitcoin, for example, and there's something like 19.5 million Bitcoin already been, minted and is basically in the marketplace. So that means that there's only really, approximately 1.5 million left to go. And the last Bitcoin won't be printed until 2140. Is it 2240?
2140.
Anyway, we've got about 120 years. So it's 2240. So that will, be far in excess of the amount of time that I've got left on the planet. So it will just keep on growing and growing and growing and growing in value. And so for me, Bitcoin is the easiest generational wealth instrument that I have ever seen in the history of the whole of wealth creation. Because you can have half a Bitcoin today or a quarter of a Bitcoin today, and if you were to give that to your children and they were to give that to their children, basically that lineage or those future generations would be incredibly wealthy. So for me, if I ever was in a position where I wanted some of the wealth of, let's say, something like Bitcoin, I would borrow against it. I wouldn't actually sell it and cash it in. I would borrow against it, and then I would use the borrowings to do further, wealth creation or further investing. And then the Bitcoin would just go into my siblings. It would go into my, nieces and uncles and nephews and all of those sorts of things. And that would create their wealth for generations to come. So, I'm not a person that gets caught up in the luxury of being wealthy or the status quo of being wealthy. So I don't get caught up in any of that. So wealth for me gives me freedom and it gives me independence. It doesn't give me anything fancy because I don't want anything fancy. So I have a very, very happy, engaged, full lifestyle because I've got of the freedom and independence just there, and it just keeps growing and growing and growing and growing, and I don't have to worry about anything there. And so I still run business, I still teach people, and so that just produces income. And so income is required for your daily needs, your daily, monthly, yearly needs. And so I separate the two things in my mind. One is for building and building and building, and that will just compound and compound and compound. And the amount of income that I want, that just goes up and down as I, become interested in projects or working with other people. If it goes down, it's a no concern, because I've got all the income. I've got plenty of sources of income.
So
So hopefully that makes sense to you.
just to do a quick check, does anybody need a translation on any of that? Or are there any follow-up questions you might have before we move on? Or is everybody all good? There's a few questions coming in the chats. I'll ask a few more questions that were stored in the forms, and then we'll switch to the chat as well to add more dynamics to it. Just before I move on to that second question, the 2 points out of that part just now that Paul was talking about that I think many of you should investigate more into is this idea of borrowing money against your Bitcoin. What does that actually mean? And how would one actually do that? How is that possible? I think that's a question that many of you should be investigating further. And especially for those of you that are in the VIP Telegram, which not all of you are, but if you are, when it comes to phase 3, that's definitely something that you guys would want to be well versed on before it actually happens. The second part of that question is the second part that I think a lot of people should really pay attention to is this idea that wealth and income are two different things. Okay, so if you notice the two keywords there were income, cash flow from business, and the other one was wealth. So things that get parked into Bitcoin, shares, silver, gold, whatever it is you choose. In this case, the central theme would be Bitcoin or crypto. And those two things are separate things, and you should really start thinking about that. Anyways, there's a question from the forums, so I'll go through that and then go to the questions in the chat. This one is from Gusti, and his question is, hi, so my question is, how did you see Bitcoin as an investment opportunity back then? Because I presume back then, nobody knew what Bitcoin was and who invented it, as there's a common saying that goes, invest in people, not in the project. Thank you.
I don't think it's true to say that nobody knew what it was. It's probably true to say that most people didn't know what it was. But the people who invented it, they certainly knew what it was, and they certainly knew of its potential. So by the time I started, it was sort of like a lot of people. When I first heard about Bitcoin, it didn't make any sense to me. And so, I might have ignored it at $5 or $2 or $3. I just didn't understand it. But it wasn't that I didn't understand it. It's just that I was too busy with other things, such as, creating wealth in other areas and running businesses and things of that nature. So I didn't pay it too much attention. And then I just kept on coming across it as, I'd listen to somebody and they would mention it, and I'd listen to somebody else and they would mention it. And then, round about where Brian is saying, around about $1,000 market, sort of, so I actually better have a fairly serious look at this thing, just to understand it, nothing more. And the more I understood about the technology and blockchain technology, and the more I understood about the ledger and how it is the greatest form of equality, and the more I understood about decentralization, and the more I understood about how it couldn't be hacked or it couldn't be, taken over, the more I came to appreciate that this as a new technology, and remember that we had just come through a period of new technology with the internet in 2000, and in the late 1990s, the early 2000s, there was lots of new technology coming through, and we saw the results of that new technology in companies like IBM and in companies like Amazon and companies like Microsoft and companies like Google. And so here was another technology, and it was the potential for that technology, not necessarily the altcoin itself, but the technology as a pathway that a lot of other new inventions could be built upon, and you could have ownership. You could put your land on that technology. You can put your collections, you can put your title deeds, you can put anything onto the technology, and then you have proof of ownership because nobody else can, do some fancy footwork, so to speak, or do anything underhanded to take those sorts of things away from you. So it's not true to say that, nobody knew what it was. And so when I understood its potential, that's when I started purchasing.
Does anybody need translations or any further questions follow-upping that? And if you're all good, just say all good. Okay, so there's a few people saying all good. All right, so we'll switch to the chat now. Of course, I'm going to be prioritizing questions from people that are actually showing up here. I mean, there's been questions from people that submitted the form, and I don't see their names on the list, so I'll give priority to, obviously, people that actually show up to to the call as well. So this one's a question from Ricardo. His question is, hi Paul, just wondering, do you mostly hold in Bitcoin or also other alts? How do you manage to hodl, hold on for dear life, for those of you that don't know, during the crypto winter? Or do you actually short the market during that correction?
A very good question. Now, I hold other altcoins, but I don't trade any of them. Okay. I'm not I want to enjoy my lifestyle without being super focused on any one thing and worried about any one thing. And so when you look at the history of something like Bitcoin, and that will translate into others, and I'll talk about a couple of others, or at least one or two others that I have an interest in. But when you look at something like Bitcoin, you can now look back 14 years worth of history. And basically it goes up and it goes down and it goes up and it goes down and it goes up and it goes down and it goes up and it goes down. And so every winter, so to speak, the price is higher than it was in the last winter. And every, let's say, summer, so to speak, or, surge, the price goes higher than the previous peak. And so it's a pattern. And so I never get worried about where in the pattern we are at any given time. If we're low on the pattern, it just means that it's an opportunity to purchase at a lower price. Now, it's interesting that if people buy, let's look at the last cycle where I think the peak was something like 69,000 USD. And then I think it went down to something like 15,000 USD. And as it's going down in price, the psychology and the emotions of people have them in panic stage. Now, let's look at the same effect, but let's look at it in a different market. Let's say that we were looking at iPhones, for example, and you bought an iPhone for $1,000 and then it went down to $500. If it goes down to $500, most people would buy another two iPhones, or at least buy another iPhone, because that brings down the price of the first iPhone to $750, which means that you're getting it at a discount. If it went down to, let's say, $25, you would buy four iPhones, because now you could buy four iPhones for the price of one iPhone. If the same thing happened in the housing market, if suddenly, for some reason, you bought a house for $100,000 and then in a market cycle, it went down to half of that or 2/3 of that or 3/4 of that, you would be jumping in because now you know that the housing market will come back to another high. It's the same as cars. If you bought a car for $50,000 and it suddenly went to $25,000 because of an oversupply or something like that, you'd say, "Beaut, I'll go and buy two cars or I'll go and buy four cars. And when the price goes back up, I'll sell cars and I'll sell a house and I'll have my house for free." So it's really to do with the psychology and the emotions of people. So we know that it's just going to go up and down, and I don't care because I don't need it at any given time. I don't need it when it's high. I don't need it when it's low. I don't need it on the way up. I don't need it on the way down. It is just there to do its own thing. And it will just compound and compound and compound and compound and compound and compound. So the idea is that it's the market that will create the wealth. It's not what I do to Bitcoin, let's say, that creates the wealth. I can't do anything to Bitcoin. I can either hold it, or basically I can stake it, or I can try and trade it. But all traders lose money eventually because they never know when to get in because their emotions are too fearful, and they never know when to get out because their emotions are too fearful. And so you just basically hold. most traders lose money if they get in and out, in and out, in and out, because they just all you got to do is get the timing wrong once, and you've lost a huge amount of opportunity. The other altcoins, I in the early days had a swag of lots and lots of altcoins. Most of them still exist, but they haven't done anything startling. But I was in early on Ethereum. I was in early on things like Litecoin. And for me, it doesn't matter what the price is today. It doesn't matter what the price is next year or the year after or the year after or the year after. It's just going to keep growing, or it's not. It's of no concern to me. But the one coin that I am really, interested in is Theta. And when you understand the potential of Theta and the need for increasing, broadband capacity, then you're looking at a really, really, really clever idea with a real life need. And that will just keep getting bigger and bigger and bigger and bigger. So I hope that conveys something, Ricardo. If you need to come back with another question, if I haven't explained it clearly, please come back with another question.
Does anybody need help translating or have any questions to follow up on that before we move on? So I don't know if you can see the chat poll. Ricardo's just commented, thanks for the answer, Paul. It's just amazing that you have strong conviction in the fundamentals, even during FTX crash, Luna crash, and regulation issues.
Yeah, it's more than just a strong conviction in the in the crypto space or the particular altcoin. I'm very, very clear on what is wealth and what is not wealth. And so it's nice to have wealth, but I don't actually need it, if that makes sense. I'm not saying don't have it. I'm saying it's nice to have it because it gives me a sense of security. It gives me a sense of predictability. It gives me a sense of independence. It gives me a sense of freedom. But see, I don't actually need it because I've never used it. It's just sitting there and it's just getting bigger and bigger and bigger and bigger. Like I say, I'm not one to get, to buy in to the seductiveness of, let's say, status or luxury or anything like that. I've ridden in Rolls Royces. I've driven Bentleys, I've, flown in jets, I've flown in helicopters, but they've always been somebody else's jets. They've always been somebody else's helicopters. There's always been somebody else's Bentleys. I'm not interested in owning anything like that because I would much prefer to be anonymous and have a simple lifestyle. So it's not so much a strong conviction. It's a strong sense of independence and it's a strong sense of freedom. Now, the wealth gives me a sense of security and it gives me a sense of freedom, but it actually doesn't give me a sense of independence. What I need for independence is a daily income or weekly income or monthly income. And if I can generate income more than my expenditure, that's all I ever need. And so I concentrate on cash flow strategies because the more cash flow, the more wealth I can create. But what I need is the daily, the monthly, the yearly income so that we don't have to worry about, anything that might happen. So yes, there is a strong conviction about the fundamentals, and I think that's a really healthy thing to have, and you can do that through research. But there is that separation in my mind about wealth being something that will take care of itself. The market is going to create the wealth. I can't create the wealth. What I can create is income. And with income, I can buy the asset, and then that market will worry about the asset. I don't have to worry about the asset. So I hope that just expands on that answer, Ricardo.
There's a member, Gerard, that said needs translation. Can I ask which part do you need translating on? Bagian mana yang perlu ditranslasikan? Karena jawabannya itu lumayan panjang. Kalau bisa dirinciin, lebih baik. I'll give maybe like a short 20-second recap. Walaupun, although that's not really going to do that answer justice. Secara singkat, dan ini bukan jawaban yang panjang sebenarnya yang lebih berharga, tapi pertanyaan dasarnya kan, apakah Pak Paul hanya pegang Bitcoin atau ada campur sama altcoins lain? Apakah pas lagi puncak di short itu artinya dijual bahkan di negatifkan tanda kutip jumlah Bitcoin pas dia lagi turun, gimana cara tahan dalam musim winter crypto atau musimnya dia lagi turun. So kalau you tahu teori kita, it's the H5K L6 type stuff, right? So itu pertanyaannya, dan jawaban singkatnya adalah Paul lebih memilih untuk apapun yang diparkirkan dari cash flow, income yang dihasilkan dari bisnis biasa. Apapun yang, misalkan nih, kita hasilkan, let's say sebulan 100 juta sebulan, untuk contoh doang ya. Mungkin kepake, let's say separuhnya, 50 juta. Ya, 100 juta sebulan, 50 juta kepake setiap bulan untuk pengeluaran. Juta sisa, aset wealth. Aset seperti Bitcoin atau jenis itu. Untuk kepentingan naik terus. Right? Jawabannya Paul adalah dia lebih memilih untuk hidup dengan santai, gak perlu mikirin dasar hari ini gitu. Dan oleh karena itu dia memilih tidak melakukan trading apapun, yaitu long, short, pakai leverage. Apapun yang diparkirkan dari sisa income yang dihasilkan, udah diemin di situ. Biar itu gulung terus 2 kali lipat. So, kalau kalian familiar dengan konsep 8 langkah 2x, biarin itu naik terus 2x, 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 compounding. Sambil dia hidup biasa, semaunya dia, intinya begitu. Okay, so itu translasi singkatnya, tapi of course ada banyak hal-hal dalamnya yang agak panjang, jadi itu kenapa aku tanya translation spesifiknya. So switching back to English, there was another chat comment from Gusti as well. So Gusti was the one that asked, how did you know to invest in Bitcoin back then when nobody knew about it, blah, blah, blah. And he further added, hi, Paul, do you think Bitcoin can catch up its market cap with other traditional assets? So I'm assuming, Gusti, if you want to expand, I'm assuming that means gold shares or what specific assets. But the question is, can the market cap of Bitcoin catch up with the market cap of traditional assets?
Yeah, absolutely. Now, rather than so the answer is yes, and more quickly than gold ever did it, and more quickly than any other asset class has done. But what I'll do is I'll put a couple of videos or links to videos in the chat box, and you can take your time and watch these videos at your leisure, and they talk about the potential future and direction for something like BTC. So just give me a minute and I'll get some links for you.
I'll just make sure that you're able to chat. I think you can. I believe you can chat. Yep. All good. Thank you, Paul.
So that's the first one. That's about an 8-minute video that you can watch in your spare time. And I'll put another one there.
I suggest friends to copy paste these links and put them somewhere else, just so that, once the Zoom call is over, you still have those links.
And that, that talks about the future price of Bitcoin in, I think, 2030. So
were there only 2 links or were there more?
Yes, 2. So there's 2 separate links there.
So everybody just make sure to confirm. Yep. So we got emotions, like reactions coming in. So I'm assuming you guys can read that. While that's happening, I'm just going to look through the other sets of questions. So here's a question that has nothing to do with crypto. It comes from Devin. And I believe Devin's asked actually 2 questions. So I may as well ask them both at the same time. The first question is, I've just lost it. Where did it go? There it is. What is the most efficient and time-saving way to reach your goal? That's the first question asked by Devin. And the second question asked by Devin is, how to get network from someone who's richer and utilize her to make us be rich also. So to sort of fix the grammar, it's how to network with someone richer than us and utilize her to help us get richer as well.
That's an excellent question. Sorry, what was the first one, Brian?
The first question from Devin is, what is the most efficient and time to reach your goal?
Okay, so the most efficient, the most effective time to reaching your goal is consistency. And consistency is another word for momentum. And momentum is like, you can imagine yourself that's on a boat and you're trying to get to somewhere. And you start the engine and it goes forward, let's say 100 meters, and then you turn the engine off. And then 2 days later, you start the engine and you go a little bit more, and something happens and you get distracted. So, just imagine stop, start, stop, start, stop, start, stop, start. It's going to take you forever to get to where you want to get to. But if you've got momentum, if you've got consistency, in other words, you turn your engine on, you don't have to get there really fast. It's just whatever whatever the speed that you can drive at, whatever the speed that you can sail at, whatever the speed you can, move at, you are consistent with your actions. And so for wealth, if you put $1 into something every single day and you maintain that, that will be the fastest way to your wealth. If you can afford $2 a day, if you can afford $3 a day, that's the way you do it. But you do it with consistency. And you don't look for a shortcut, because there is no such thing as a shortcut. And if you don't learn anything other than this idea that there is no such thing as a shortcut, and if anybody out there is trying to sell you a shortcut, you know that they're not your best friend. Okay? Now, the reason why there is no such thing as a shortcut, if you have never been wealthy before, if you've never created wealth before, you can't do it faster. You can't do something you've never done before faster or shortcut it. You can only do it at the speed it takes you to do it the first time. Now, if you've created wealth before, now you can do it faster because you've learned something. The next time you want to create wealth, you've got a lot of learning and a lot of experience under your belt. And so, of course, you can do it a little bit faster because now you know and you're a little bit more confident. If you create wealth a third time, of course, you can do it a little bit faster. But for the first time, there is no such thing as a shortcut and there is no such thing as faster. There is just the speed that you go at. And so consistency will be your greatest supporter. Consistency at whatever level of creation that you can maintain.
Thanks for that, Paul. And I'm just going to quickly ask, Devin, I know you're in the room. Did you understand that answer? And did that make sense? And did anybody else in this room want to ask any follow-ups or ask for clarifications? Maybe ask for a translation as well. Okay. So Devin's just said, yes, I really understand. And
I'm just reading that question from Ricardo. I don't have a percentage allocation anywhere, Ricardo. If I were just to look at gold and silver, then it's wealthy. If I were just to look at my real estate holdings, it's wealthy. If I were to look at my crypto holdings, it's wealthy. But I don't have 10% here and 30% here and 50% there. I don't have a brain like that. I couldn't keep track of it to save my life. I'm much more of an intuitive person, Ricardo. So any one of those markets, as long as they are independently wealth, then that's all I care about. And there's another one by Gusti there that says, Paul, do you ever plan to rotate all your money out from other assets to BTC? No, absolutely no, because I'm already wealthy in BTC. I'm already wealthy in the other assets, and so I don't need to rotate them. Because see, the way that I think about things, it's the market that creates the wealth. It's not me that creates the wealth. The only thing that I can do to BTC is I can have one or not have one, or I can have two or not have two, or I can have 10 or not have 10. But let's just go to one. See, my job is to have one. So I'll do everything in terms of cash flow creation in order to get one. Once I actually buy one, I can't do anything to it. I can't make it grow in value. I can't renovate it like I can renovate a house. I can't do anything to it. It's the market that does the heavy lifting. And so in all of the other assets, I can't do anything to gold. I can't do anything to silver. If people think that they can trade, most traders lose money. So that's just not an issue for me. So my job is to either have a house or not have a house, or have two houses or not have two houses, or have three houses or not. And so in order to have three houses, I need money to go and buy the three houses. And so that is business that produces the income. And then once I've got the asset, the market takes care of everything else. I can't do anything to increase it. I can't make the real estate market run faster or slower or higher or lower. Okay, that's market forces that does that. I can't make Bitcoin go higher or lower. I can't influence it anyway. It's market forces. Same with gold and silver. So I want, an amount that will give me freedom and independence for as long as I live, and that's fine. And if I have that in all different marketplaces, then, I'm happy.
He's just added that. So for the sake of the recording, I'm just going to read out Ricardo's question and then so the question that was answered was, what is your allocation in between gold, silver, Bitcoin, and other investments? And how high do you think Bitcoin can reach in this cycle? Thanks. But that's just for the recording. Gusti's just added as well.
That's okay. I sent the video links. They'll talk about that.
Gusti's also just added, that's insane, the fact that most financial advisors in Indonesia say crypto is super volatile and not the best bet, especially if you have unstable income.
Well, and that's an interesting thing. And so one of the things that I do, Gusti, is I create what I call a form guide. And Brian might need to explain to you what a form guide is. And then I'll show you my form guide so that you understand what I mean. So go for it, Brian.
Sure. So do I speak in English or do I speak in Indonesian? I'll speak in English. Anybody else?
Up to you.
So form guide is a word in English that is usually used in the context of betting. So you don't really have this culture in Indonesia, of course, for legal reasons. But in a lot of Western countries and a lot of Asian countries like Hong Kong, something like horse betting is a very, very big business and a very big cultural thing as well. So back in the days before everything was online, and probably even today as well, but it's now online, you would have these printouts, these like what you can see on the screen right now, which I think everybody can see. And this is what a form guide would typically look like. It would have the name of the horses that are racing, the jockey, which is the people that are driving the horses with the whips, right? It would have on each race, so for example, group number 1, 2,000-meter race, $5 million pool prize. I'm assuming that's what that means.
Yeah.
And it'll have every horse and jockey listed. It'll have the statistics on every jockey and every horse. Forgetting what these means, but it'll have statistics and comparisons between different horses and their careers and so forth. And then it'll have a ranking or a allocation from each betting house or each expert saying, oh, okay, this one has a ranking of maybe 2 or 1. And basically, the lower the number or closer it is to number 1, the higher the chance that horse has of being the winner. And the higher the number, then the odds are against that horse to win. But the reward is also higher as well. So that's what a form guide is in the traditional context. And so when Paul says creating a form guide relating to Bitcoin, it's literally just creating a form or a spreadsheet or whatever you want to call it that compares the performance of Bitcoin as a horse to the performances of other types of assets. So that, correct me if I'm wrong, Paul, but that...
No, that's a perfect explanation. And if you can allow me to share my screen.
I'll do that straight away. You can go ahead and do that right now.
Okay, so you should be able to see a blue slide that says form guide. So just give me a thumbs up if you can see it.
Yep.
Okay. Now, one of the things that I need to understand as an investor, okay, because you've got lots and lots and lots of people out there with lots and lots and lots and lots and lots of opinions. And I don't know, who to listen to. I'm not that clever. Okay. So it's like that person said, all the financial advisors, they'll all have their opinions. So the thing that I want to know is the first thing I want to know about anything is what its CAGR is. So CAGR, and that stands for the compound annual growth rate. So that's the rate of return that would be required for an investment that basically grows in value over a period of time. So compound annual growth rate. So the CAGR is very important for me. So now I'm going to examine the CAGR of all of the instruments that I might be interested in. Now, for instance, this is the CAGR of the US dollar, Bitcoin versus the US dollar, Bitcoin versus the euro, the Great British Pound, the Australian dollar, Canadian dollar, Japanese yen, the Chinese, Indonesia, Deutschmark. Okay. So basically, we can look at the CAGR, the compound annual growth rate, in 2011 was 1,473%. Basically, and you can see that it just goes up. It's had a couple of negative years, but basically it's a really, really strong CAGR at 144% against everything else. So you can basically examine those things, and these are just in its different currencies. But in the USD, you've got 144%. In the euro, you've got 149%, 149% the Great British Pound. Of the Australian dollar, it's 153%. So over, between 2011 and 2023, which is, a fair number of years, 12 years, it's traveling at an average annual compound growth rate of over 100%. Now, I'm going to compare that to a risk ratio. And so the risk ratio is called the Sharpe ratio. Now, the Sharpe ratio, it compares the return on investment against its risk. And there are ways of measuring that. And so if we look at the risk ratio, it's, you can graph the risk profile of something. And here's an annual graph of its risk profile. And basically, the most important number here is basically 1. So the Sharpe ratio for BTC is currently 1.71. Anything that's above 1 is considered positive. Anything that is below 1 is considered negative. Now, the current Sharpe ratio for the S&P 500 is 0.88. So it's twice as risky as BTC at this present time. So I've got over 100% annual compound growth rate, and I've got less risk than, let's say, the S&P 500. Now, if we compare Bitcoin against gold and against the S&P, okay, so we've got 128% versus 14% versus 14%. Basically, year 14, we've got 252% versus 4% versus 11%. So I'm going to look at that, and for me, the thing with the best form in terms of its CAGR and the least risk in terms of its Sharpe profile is BTC. So none of those advisors can explain to me why they think it's more volatile. Volatile just means it goes up and down. We want things to go up and down. We want volatility. We don't want stagnancy just going blur, 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 blur at 14% or 11% over the price of a year. That's going nowhere. We don't want something that's just traveling at 4% or 3%, because if you take inflation away, it's going backwards. So we don't want steady. We want volatility, because now you can get in low and hold it to high. That just makes complete sense to me. So I don't listen to those people that say this is too volatile. I look for compound average annual growth rate and its Sharpe ratio. Then I can see, well, okay, I can take any 4-year period since 2011, and over the 4-year period, you will not find a negative CAGR. In other words, any 4-year period from today backwards, and you will not find a negative CAGR. In fact, the lowest CAGR over the 4-year period, over any 4-year period, has been 24%. So its lowest, the lowest it's ever performed over a 4-year period, is 24%. The highest is 178%. Okay, so I want, even if it's 24%, it's still double all the other things with a less risk profile to it. If we look at housing, okay, so we know that housings go through growth and declines, and long-term trend is upwards. However, if we look at, this is Australia, nationally, house values have increased by 382% over the past 30 years. Bitcoin has done that in 2 years. So BTC is not only safer, it's faster, and it is less risky. So on average, the compound terms of real estate since 1992 is 5.4%. So would you prefer 5.4%? Take away inflation at 3%, let's say. So now you're doing with 2.4%. Would you like 147%, take away inflation at 3% and get 144%? I mean, you tell me. So I create for myself a form guide. Now, if we look at the stock market, which is basically the S&P 500 over the last 150 years, the annualized return over the last 115 years is 9.19%. If you include dividends, if you don't include dividends, it's 6.8%. I want something at 100% every year. I don't want something at 9% or 6%. If we look at the stock market and we break it down by its industry type, the expected growth rate over the next 5 years for advertising is 0.80, aerospace 8%, transport 22, apparel 5, auto and truck 17. So again, that's what I mean by creating a form guide. I'm going to get all of the research and I'm going to put it into my spreadsheets and I'm going to study them and I'm going to pick the one with the greatest potential and the lowest risk. Hopefully that makes sense, Gusti.
Yes, Gusti just commented makes perfect sense. And what a great answer that was. Does anybody need any clarification on what was just explained there? Understanding that it was both in English and also using a lot of numbers, terms that might be foreign. Does anybody need clarification on that or would like to expand on that a little bit deeper? Lydia says she loves it, Paul. Okay. So that looks pretty good from most people's side. Now, there was a second part to Devin's question, but before we get onto that, so I don't know if, Paul, if you want to answer this one, but you did sort of hint to it earlier. Dynasty Zin, if I'm pronouncing that name correctly, asked, Paul, if you don't cash out your investments, how do you enjoy the results of your investments? Now, in an earlier question, Paul did say the keyword was borrowing against your Bitcoin, but I don't know if you want to expand on that, Paul, or if that's...
If you study the history of wealthy people, truly wealthy people, they never cash out their investments. They never sell their investments. They go down from family to family to family to family to family. And so I don't need to cash my investments. Nobody needs to cash their investments if they set up a different skill set. And the different skill set, of course, is business. And so if you run profitable businesses, that money provides you for your lifestyle. There's no reason for me to cash out the wealth. Now, if I wanted to create more wealth and more wealth and more wealth, I can borrow against the assets. So let's do a mental exercise. Let's say that you had 10 BTC at the moment. So that would be worth, I don't know what the price is, but I'm going to call it 70,000 USD. So that would be 700,000 USD. In Australian, that would be $1 million. Now, I could borrow against BTC. Okay, now let's say that I wanted to borrow $500,000. Then the cost to borrowing that money would be maybe 5 or 6% at the moment. I don't know what the true figure is or the real figure is, but let's say the cost of servicing that on a yearly basis would be 5%. So that would be roughly $25,000 a year. So I can have $500,000 and I can go and buy an asset that is increasing at 100% every year. With my 500, I could buy 4 or 5 BTC and only have to come up with 5% to cover the cost of the holding. Does that make sense? Now, if I've got a business cash flow that covers the 5%, which is only $25,000 a year. And I'm sorry if that $25,000 a year seems a bit flippant. I don't mean it to be flippant. It might be a lot of money for some of you. I don't know, but it doesn't matter. What really matters is if you can make more money than it costs you to borrow it, then you would do that every single day of the week. If you haven't learned how to create more money than the cost of borrowing the money, then that would be a silly thing to do, is to borrow money, and because you would be going backwards. Okay, so the real skill is learning good business practices, good cash flow strategies, and it's most of the modernized world is going onto the internet. And so, there is just so many ways you can make money on the internet these days, but it's a skill. You've got to learn it. You can't, it's not magic. But the analysis is you have borrowing costs, and let's say that 5%, or it doesn't matter if it's 10%, you've got to make more than 10% just to cover the costs, and that's fine. And I've just done the form guide for an asset that's going up at 100% compound annual growth rate. So to hold that 100%, I only have to pay 5%. So if I wanted to multiply, I would be doing that. But I'm not interested in multiplying, because if I'm not likely to use my wealth, it's just going to go to somebody else. I don't want to have to get in to make more and more and more and more and more. I firmly believe in enough's enough. Now I just concentrate on supplying for my, enough to socialize, enough to meet friends, enough to share whatever, enough to not have to worry about the price of things. And that is cash flow.
So does that answer your question, Dynasty Zin? And I really want to highlight that there's really two very different things here we're talking about. There's income and wealth. A lot of the people that are attracted to crypto, especially in Indonesia, do so for the idea that you can get rich quick from, buying just the right meme token or whatever it is. And really all we're interested in is just having the money that we do have, whether it's you're leveraging from, borrowings or similar, or whether you're using just whatever you can save, right? The money that you do have is compounded through the best performing asset, which at the moment is Bitcoin and arguably altcoins, strategic altcoins.
Well, the idea of get rich quick comes from the idea of winning money in a lottery of some description.
This doesn't exist in Indonesia.
Well, there's all sorts of lotteries that they do in America. There's all sorts of lotteries they have in, developed economies. There's pools, there's football things in the UK. But all throughout the history of anybody, even if it's gambling or anything like that, all throughout the history of people who are big sporting names and they make a lot of money, all throughout history, anybody who creates or comes into a lot of money quickly, 99% of them lose that money over a 4-year period. So there is no such concept as get rich quick. Can you make a lot of money quickly? Yes, it's possible, but it's very rare. And if you do, then 99% of the time, you're going to lose that money in the first 4 years. That's because you've never done the study on how to truly become wealthy, independently wealthy, and have that sense of freedom without the emotional attachment and without the psychological attachment. It's the emotions and the psychology that causes wealth to be lost and money to be lost. It's the same feeling as when you get paid and you buy yourself something nice and you feel good, but you've actually lost the money because now you can't use that money to go and buy something that will actually grow in value. Rather, you've used that money to buy something that can never grow in value. In fact, it loses its value and it goes to zero. But somehow you feel good about that. And somehow you don't feel good about taking a little bit of risk on something that may, in fact, grow in value. And that's the psychology that's turned upside down for most people.
I think one of the best ways you've ever explained it that really sticks in my mind was the same person could lose, say, $10,000 or 150 million rupiah, lose it by trading or lose it by paying for a very nice holiday to somewhere nice, Japan or whatever. You still lose $10,000. You still lose 150 million rupiah. One of them makes you feel shit. The other one makes you feel good.
But in one way, you feel good about the fact that you had a nice holiday. And the other way, you feel terrible because you've lost money trading. At the end of the day, both accounts register zero. And that's how the psychology is turned upside down on most people.
Dynasty's just commented, I got the idea, but I don't know how to do it. Maybe it's not suitable with my condition. I think forgetting the whole idea of borrowing against your Bitcoin, so forget that concept for now. If you're at the stage where, for example, funds are limited or restricted, then really the key to take away from all of this would be to increase income, because it's income, not wealth, not Bitcoin, not extra Ethereum, extra whatever. It's your income increasing that will allow you to enjoy and pay for all the things you need to pay for in your life, and have something left over that you can park more into whatever it is at that time, Bitcoin, gold, silver, whatever it is that you choose at that time.
Yes, and Brian's correct. I'm just giving examples so that if you ever get to that stage, you now know what to do, or at least you know there's some ideas that you can do more. If you're not at that stage yet, you must be at the accumulation stage. And so, you know, you may not be able to go out and be able to afford a Bitcoin, but you can buy $1 worth of Satoshi.
That actually ties in very well to this next question I'll read out. It's from the list of questions. I'm going to keep the name of the member anonymous because he's given personal details, but hi, I'm a construction worker. I'd like to clarify, how can I manage my finances with a monthly income of 5 million rupiah, which translates to around about 500 Australian dollars per month? From that 500 Australian dollars per month, approximately $200 is allocated for monthly necessities for XYZ people, such as buying internet data, joining private memberships, and food. The remaining $300 is saved. Essentially, how can I maximize the remaining $300 in salary in crypto? My hope is only in crypto. I can't increase my income job due to activity and limitations. I have a problem with my eyes, a corneal disorder since birth. And then, thank you. I hope to get a good answer.
You know, if you go back and listen to the answer I gave about the form guide, if there's 300 left over at the end of the month, and this is what I would be doing. So this is a difficult concept for a lot of people to understand. If you, just working off your figures, if you are living sort of okay on 200 a month and you can save 300 a month, it really doesn't matter if you lose that $300 because you don't need it for your $200 a month lifestyle. Now, if you can understand what I just said, you don't need it because you're not using it. It's just going to sit under your mattress somewhere, or it's going to sit in the bank somewhere, but you don't need it. What you need is the $200. So that's the first thing. And so the second thing is to become emotionally detached and psychologically detached from your $300. That way, you can put your $300 to work potentially. And if you go back and look at the answer I gave about the form guide, now I'm going to study the marketplace, potentially what will give me the best return for my $300. Now, if you understand that once you put your $300 into anywhere, you have to think of it as not existing anymore. And you go back and you work another month and you get your $200, and that gives you a lifestyle for a month. And now you've got another $300. Now you can take that $300 and either put it to work or put it to work in something differently. So then I would look at what the CAGR is for all of the things that I was interested in. And if you guys are in a club or some description, you know, you can all share the research on all of the things that have a CAGR, and you can find out the CAGR for anything, a compound annual growth rate. And then I would study the Sharpe profile, the Sharpe ratio on anything that you considered, and then you put that to work. And if it goes up in value, that's good. All you can do is have one or not have one, or have two or not have two. You can't make it do anything. So for me, if I can live on 200, it doesn't matter that I lose the 300 because next week I get it back again. If you can think like that psychologically and emotionally, then you can put it to work strongly. If you can't think like that, then fear is always going to overcome you, and your emotional attachment to having that quote unquote somewhere what you consider to be safe. But see, safe doesn't create wealth. Volatility does. Strong movement up or down does. And that's where you can develop better skills.
All right. Does anybody need to add on to that or sort of dive deeper into that concept? Or if you're good, just say yes, good, or something like that. Cool. So just considering time as well, I might throw in a couple more questions and then we might give a free for all. Anybody open their microphone and sort of head towards a closing of this Q&A call. How does that sound?
Good.
Good. All right, cool. So there's a question that came through on the chat, and it's from Fendia. Fendia asks, do you have property assets? If yes, do you have core principles of property assets?
I do have property assets, and I started in property. So, and that's because that's the only thing that I understood when I was starting. And when you mean core principles of property asset, I'm not quite sure what you mean.
So Fendia,
So if I can just, hallucinate or interpret that, I'm not particularly interested in property as an asset, because if we had a much longer time period with you, I could explain it in depth. But I don't see property as an asset, especially if you have a mortgage against it. I see it as a liability. So the only reason I would hold property, or I do hold property, is because I get the cash flow out of the property. So I don't care what the value of the property is. It can go up and down. It can go up and down. I don't care. What I care about is the income that I can get on a consistent basis. So my core principle on property, if you like, is as a business itself. And if the numbers don't work as a business, then I'm not interested in it. So with the income, I can then create other things and go into other markets, but not property as an asset, because it'll be too long an explanation to fully get into it. But as a business, the core principle is it's got to give me more money than it actually costs.
which is a concept that would be very foreign to the typical Indonesian, because, for most people growing up, everybody's parents goes, you gotta save up and have a home, get a mortgage, in Indonesian mungkin cicil rumah or something like that. So most people view real estate as the asset that everybody dreams of getting, or most people dream of getting, and not really understanding that, the word asset is used around a lot, but means different things to different people. And in the case of what Paul's just explained, real estate as an asset, in the definitions that haven't been explained but could be explained in a future call, real estate isn't really an asset. It's actually costing more money unless you turn it into a business that generates cash flow. So thanks for that answer, Paul. And another one from, before we move on, and anybody want to sort of follow up on that, or need translations or anything of that kind? Or if you're good, just say good. I'm checking in every single question just to make sure everybody understands, yes, because I want to make sure that everybody gets maximum value out of this. Interesting take about the property shouldn't be just an asset, but a source of income. Something new. That's from G. All right, so one more question from the form submissions. This is from, this is kind of cheating because there's actually 4 questions. Is there Andrifo, Pak Andrifo Dermana ada di group ini? Is there an Andrifo in this chat right now? Yes, I believe you are in here. Pak Andrifo, I'm going to read your question, but I do know for sure, because this was one of the questions that Paul asked for clarification on. There's 4 questions here, and I'll type it in the chat box just to save a bit of time. Could you pick 2 or 1 or 2 of these questions to sort of focus on? In the meantime, I'm going to read the whole thing, but if you could just sort of focus in on the question a bit more, that would help. So the question is from Andrifo: where did Mr. Paul start to become wealthy? Or was Paul already wealthy? What did he do to become super wealthy? What step-by-step actions can beginners take to reach a level like Mr. Paul's? What kind of mindset does he have that has brought him to his current position, which I think should have been answered through this conversation. And final question, once you become super wealthy, what's next? What is the purpose of life now when everything can be owned?
Great series of questions. Let me start by going backwards. Let me answer the final question first. And once you become super wealthy, what's next? What's the purpose of life now when everything can be owned? Okay, so I don't know what the purpose of life is for everybody else. I can only really talk about myself. And so I don't know how long I'm going to live, but whilst I have got a sound mind and I can still put a few ideas together, my whole life, apart from the things that give me, personal joy and pleasure, like my hobbies, my whole this this stage of my life is about giving back to other people.
Well,
So it's
do you mind if I
sorry?
do you mind if I interrupt your answer just
No,
because
go for it.
the person asking has asked for translations throughout this answer. So I'll translate as you talk, otherwise it will be too much.
Okay.
Go ahead and continue, Paul.
Okay. So then the second last question is, what kind of mindset does he have that brought him to his current position? This is probably going to be a bit of an unusual answer, but you asked me what kind of mindset. I have a real problem or a real challenge, excuse me, a real difficulty with the use of the word mindset. So if I were to ask you, what is mind? And we might have a discussion on what is mind, but basically, mind is the function of brain. Okay, so mind is what brain does. So mind is the activity of brain. Then I might ask you, what does set mean? And set means to firmly fix, to solidify, to hold firmly in place. And so when you put those two words together, you have a set mind or a mind set, a mind that is fixed. And see, that's the problem that I see with people who use the word mindset, is that they have a set mind. Now, we know from neuroscience that, sorry, do you want to just cover on that before I go on? Sorry.
Go ahead and continue.
Okay, so we know from neuroscience that the brain is what they call neuroplasticity, which means that we can change the shape of our brain. Neurons and the way that they function are not set in place unless you set them in place. And that's what people do when they use the word mindset. And people say, oh, but you've got to change your mindset. Well, from what? One fixed position to another fixed position. It just doesn't make sense to me. If the brain is flexible, then I don't want mindset. I want mind flexibility. And unless you develop mind flexibility, you'll keep on thinking the same things over and over and over again. And you cannot advance your position if you have a mind that is set.
May I translate that part?
Yep.
Could you repeat the last part right after what you
So
wanted?
what I want is mind flexibility, because you cannot create wealth unless you actually have, you can't create wealth with a set mind, a mindset.
Yeah.
You're just going to repeat the same things over and over and over and over again. It's impossible to, change something that is set.
Thank you. Thank you for that.
So the first question is, what did Paul do to become wealthy? I started off in real estate. I bought some real estate and then I renovated it and got the banks to reappraise or revalue the property. And then I took money from that revaluation, and it was equity, and I went and bought another property and did the same thing and renovated it. The same thing, 25 houses, I think. Okay, and then the next question is, what step-by-step actions? Okay. One of the first things that you've got to think about is that you are going to be the instrument of wealth. It's not the marketplace, it's you. And if you speak to wealthy people, most wealthy people, you will find out that they took a number of years for their wealth to develop. And so it was a number of years, and they either developed a number of skills or they put money into a number of assets, and those assets grew in value, or a combination of all of those things. But most wealthy people that you talk to, none of them that I know that will say, we made wealth fast. Okay. So you've got to get rid of the idea that wealth can be created quickly. I know if you want a guarantee of what can be created quickly, it would be financial loss. Financial loss can be created very, very, very quickly. And most people who try and do things quickly lose it. So we're not interested in it. Now, it doesn't matter whether you take 5 years to become wealthy, or you take 10 years to become wealthy, or you take 15 years to become wealthy. What matters is the idea that you are going to be, hopefully, 5 years older than you are now. You may as well plan to be wealthy at the end of that 5 years, or you are going to be 10 years older than you are now. You may as well plan to be wealthy at the end of that 10 years, or you're going to be, you're going to be alive all of that time. You may as well be planning to be wealthy in 10 years, not 5, not 7, not 3, not 2, not 1, because you'll lose it. So you are the instrument, and that instrument needs to develop mind flexibility. The term I use is mind flex. You've got to be able to see past what is common practice in the marketplace. You've got to be able to see past the stories and the opinions and the instructions of people who are not themselves wealthy. The only people you should be talking to are, in fact, wealthy people, because they're the only people who can actually tell you how to do it. If you're talking to somebody who has not created wealth, they're just working off their opinions, or they're just working off their beliefs, but they have no experience of it. So why listen to them? Only listen to the wisdom of experienced people. So that would be a step-by-step process. There was a question that came up that we didn't get around to answering, and that was about how do you network? So what you've got to do is find somebody who has the lifestyle that you want. Okay, so in this case, if it's a wealthy lifestyle, if it's a freedom lifestyle, if it's an independent lifestyle, you find them. You can find them in books and read about their life. You can find them online. You can find them in person. They're not going to introduce themselves to you. You've got to go and find them and introduce yourself to them. Now, the most value you can do, the most value you can add to somebody who is already successful, is to find a way to make them more successful, or find a way to make what they do a little bit more convenient to them. So wealthy people are generally busy people. If you can get into the energy orbit of somebody who's already successful and find a way to make them more successful, they will actually take you along on the journey with them, because of the value that you're adding to them. You might have to work for free until you prove yourself that you can add value to their organization, to their lifestyle, to their whatever. But you get into the energy orbit of somebody that already has the lifestyle that you want, and you find a way to work for them, even if you have to do it for free, because the value that they will give you in return is the value of wisdom, the value of experience, not the value of opinions or beliefs or rhetoric, or, being licensed to say certain things but not other things. And then the rest is working on you, because you are going to be the instrument of your future. And the more you develop that instrument, the more you can achieve.
So that's going to be a mouthful.
Sorry, I really love the way that you're doing it. Is just sit back and watch you twist and turn. That's okay. The idea is there's no such thing as getting rich quick.
Yep.
You take your time, because it's like you can go down to the marketplace and buy a really cheap guitar, and you can try and play music on that, but it'll never be a good musical instrument, because it's not developed to being a good musical instrument. You can get the most really craftsmen, the really special, especially people that make really quality instruments, and then learn to play music on that, and you get so much better music out of it. It's the same with your own personal psychology. You are going to be the instrument of wealth. See, it's not the marketplace, it's you that's the problem. The marketplace is always there. So if you're not making enough money, then that's where you start. That's your you start there. It's not the marketplace. So we've got to get the currency of the marketplace is cash, basically. And so your job is, if you've got some spare cash, such as that person that talked about the builder, so he's got 300 spare a month, fine. He's got to, think about putting that to work, because otherwise it does nothing. It gives him a sense of security, but he has to have the courage to be able to do that. It's not the marketplace. Once he gets the courage and the psychology and the emotions, that's what he's got to develop. And that's what everybody's got to develop first. That's the foundations.
Now, I am focusing on time here. It has been about 2 hours, so I think it's around about time that we should be wrapping it up. I'll just quickly check that that translation came across well. A big thanks, Mr. Paul, for that answer and that explanation from Coach Brian. I wish you both success and healthiness always. You're welcome, Pat Injury Phone. So it has been about 2 hours. I'm not sure how you're going with time, Paul. I see that the sun's setting there, and
yes, it is.
so I think it's time that you might be, setting up for dinner or something like that. There were a few more questions coming in, but I think what we'll do is, if you don't mind, guys, what I'll do is I'll post in the VIP Telegram channel. I'll also post in the Insider community posts so that we can collaborate and ask more questions as well if you wish. But also collaborate on things that Paul has already pointed out. So things like the CAGR, compound annual growth rate of every different asset, the Sharpe ratio, and things like that. I'll put in posts in the relevant communities so that we can actually collaborate, put together something that is actually valuable for everybody. I do understand that there are a lot more questions coming through, and it's just a case of timing that there might not be enough time to answer every single question. However, I do want to, first of all, thank you, Paul, for the time that you have set aside for everybody here. And if anybody here wants to sort of make themselves known to Paul, in the sense of, show your face and say hello and just say whatever you want to say, I think now's the best time for you to be doing that, remembering that, it isn't always easy to coordinate something like this in every situation. So especially with, what I would say a very special guest, I think that you guys should be taking advantage of that opportunity as well. So we have here Amelia just saying hey on the camera. And
hi, Amelia. Hi, Lydia.
Lovely background there, Lydia.
G'day, Dynasty.
Dynasty. And Gusti says, too bad I can't turn on my cam. Coach, apakah bisa share recordingnya? So a lot of people are asking if there's going to be a recording of this, and the answer is yes, of course. I forgot to press the record button at the very beginning of the call, but I did start the recording just as about when Paul started speaking. So there will be a cutoff, but you'll get most of the recordings. How to translate to Indonesian? I'll figure it out somewhere. So you'll get it somewhere.
Hi, G.
Hi, G. And yeah, so G says, thank you very much, Mr. Paul, for the time and for sharing with us. And yeah, guys, so I hope you guys got a lot of value out of that. And again, there's no agenda to this at all. So, I hope that helps you guys move forward in your own, whatever it is, your financial results, your lives, whatever it is. And yeah, hopefully, fingers crossed, we can put something like this again together in the future. But, we'll see where things take us. Paul, it's been an honor to have you on. Thank you very much.
It's been a pleasure. And hopefully we'll get an opportunity somewhere in the future to meet you all again. But like I said, it's a real privilege and a pleasure for me. So thank you for taking the time to participate. And if you can, work your way through the recording and jot down anything that you don't quite understand, and then perhaps we can clarify that again next time. So until then, it's bye from me. Bye.
Everybody wave and say bye. Bye, Paul. See ya. And see ya, everybody else. Have a great day.